So, as much as I love talking about comic books, there are some serious things going down, especially with the US economy. Here's what I find interesting. When you look at what happened during the housing collapse, now I don't remember all of the details, all of the ins and outs, and maybe I should have looked this up before, starting this video, but I vaguely remember that there was a lot of predatory loans. As a matter of fact, I'll say this. I was in the military when I bought my first house, and I remember the amount of money they were willing to approve me for was astronomical. It was definitely more than I could afford. I was E4 at the time. No, actually, I think I was E3. I might have been E3 at the time. Pretty sure I was. And it was an amount of money that there was no way I would be able to afford. Now, thankfully, I'm very thankful that I did not borrow all I was approved for. I borrowed way less. I bought a modest house. It was nothing crazy. But I remember that. And I found that odd. Like, why would they lend? At the time, I didn't really think too much about it. Now looking back, I think to myself, why would they lend or attempt to lend so much money to a 20-year-old who could barely afford a fraction of what they were offering me? I don't get it, but in some ways I do get it. There is a good, I don't typically recommend documentaries because let's keep it real. Most documentaries, they frame things in a certain way, but there is a documentary narrated by Matt Damon of all people called Inside Job about the housing collapse. Very interesting. I watched this years ago. I highly recommend it. A very interesting documentary. What shocks me, not really shocks me, honestly, is most of the people that were at the forefront of that housing collapse ended up being the people running our economy just 4 or 5 years later. It shouldn't shock me. It like I said, it does and doesn't at the same time. I'm like, how does this happen? These are the people that were at the helm of many of these companies that collapsed the housing market, and they knew it would. Look, there was warnings. Again, watch that documentary Inside Job narrated by Matt Damon, not to be confused with a movie by the same title, but it was a very good documentary. So now, why am I getting to all of that? I'm looking at these banks that are collapsing one by one, and there's so many similarities between what happened in 2008 with the housing market and what is happening now with these banks. Now, something very similar happened back then with banks, and this was all tied into the housing market. And it's crazy. You would be surprised. And I didn't know this until watching that documentary. I didn't look up everything that was mentioned, but some things. And you would be surprised at how far back the housing bubble warnings were given. It goes back a lot farther than you think, and through a lot of presidents. And I was very shocked when I found that out. And I thought to myself, this is very strange. But yet it just appeared that nobody had the stomach to try to do anything about it. Very odd. So I was reading this article on Epoch Times about this Silicon Valley Bank. And as I was reading through the article, I'm like, man, this sounds almost exactly like what happened in 2008. So did we learn no lessons from that, or is this on purpose? I don't know, but that's a question I have. So I'm going to read this article. The title of the article is Behind the Banking Crisis That Shook the Financial System. Sudden bank failures set off a crisis, eroding public trust in the U.S. financial system for the first time since 2008. So here's what I'm going to say. if you have any trust in any current banking system, I would read a book by G. Edward Griffin called The Creature from Jekyll Island. I read that book. It gave me a very different perspective on the current world banking structure than I did before reading that book. And, you know, to his credit, the book is not, it's not one of those books where it's, hey, let's attack this crowd or point at this crowd. This is a book that is just covering the current banking system, and really nobody's safe. Like, this isn't a book of support for this group and exposing this group. It exposes everybody. Nobody is beyond the pale, as they call it, if you read that book. It's a good book. It's a really good book. Okay, this article was written March 14th by Andrew Moran. For the first time since the financial crisis in 2008-2009, confidence in the U.S. banking system has eroded as three major banks shuttered in 1 week. Silvergate, Silicon Valley Bank, or SVB, and Signature Bank. As experts brace for the next domino to fall in the unfolding turmoil, the federal government and the Federal Reserve. Here's the thing. Excuse me. Whenever you see the Federal Reserve mentioned, I hate to be doom and gloom, but bad things are to come. Not necessarily like everything's going to fall apart, but the Federal Reserve is doing us dirty. Again, read The Creature from Jekyll Island. Are trying to prevent a contagion effect that could devastate the broader economy. And what they're worried about is, as people get nervous, they do what's called a run on the banks, where everybody goes to the bank to pull out either all or as much of their money as they possibly can. And here's a little surprise for you if you didn't know this. The bank doesn't have all of your money. Most of that money is lent out to other people, invested in other things. They don't have your money on hand. Especially, let's say if you have 300,000 in some bank and you think you're just going to go up to that bank and take out your 300,000. Yeah, you're sadly mistaken. That's not how this works. And, you know, to my discredit, I didn't know much about banking and banking structure. I read that book, The Creature from Jekyll Island, and I learned about fractional reserve banking. I'd heard the term before that, but didn't quite understand what it meant. Now, granted, the book is heavy reading, but not hard to understand, if that makes sense. It's dense. There's a lot in it. He gives you references, you know, to all the source material, and it's really good. I like that. But I learned a lot about fractional reserve banking, and man, that book really changed everything I thought I knew about the current financial structure of the world, not just the US. But will these efforts be enough? In the fallout of SVB and Signature Bank, the public is still trying to wrap its collective head around what exactly happened to these financial institutions. While there were several reasons for SVB's collapse, interest rates played a considerable factor. Now, you have to understand, most people who, if you're not in the, you know, in the need to buy a house, or you're not in the need to buy a car, or any major purchase like that would require you to borrow a bunch of money and have an interest rate, you really probably wouldn't pay any attention to what's going on. And this is the sad part about most of this, is people who are, let's say, lower middle class or at the poverty line. These are not people that are borrowing money to do anything. They don't really care. They're just trying to eat. They're just wondering why eggs cost so much. And what they don't realize is, the moment they need to go make a major purchase, like let's say their car gives out for the last time. They've dumped so much money into that car and they think, all right, that's it. It's time to buy a new car. When they go to buy a new car and they see those interest rates, They're going to realize, man, I can't really afford anything right now. They've been squeezed out of the market. They've had their purchasing power completely removed. I did not realize how much all of these things mattered years ago. I really wasn't paying attention. Okay, while there were several reasons for the SVB's collapse, interest rates, I read that part. Most of SVB's clients were venture capital firms, tech companies, and Silicon Valley executives. The bank attracted new clients by offering higher deposit rates, funded by acquiring long-term and high-yielding bonds. However, SVB quickly became vulnerable to the Fed's quantitative tightening initiative, eroding the valuation of those bonds and causing widespread investment losses. People were losing their pocketbooks. Balance sheet problems became ubiquitous as the entity needed to maintain sufficient levels of deposits on hand and allocate a high percentage of its capital to cover its higher rates. Now, I know to people who don't really care about a lot of this financial stuff, a lot of this sounds like mumbo jumbo, and I'm not even going to front with you like I understand all the ins and outs of banking and what all of this means. I have a decent grasp on this, but really what it amounts to is shuffling numbers on a ledger. What most people don't realize is we've already been on digital currency for many years. How often do you use cash? This is something people don't think about. Most of us, even me, we just swipe our card. When I was traveling, I had a traveling job for years. That is the only time I regularly had cash on hand. Whenever I traveled, I always had not a large sum, but a decent sum, good enough amount of cash that if I got into some issue, I maybe had enough cash to, work some things out. When you travel a lot, especially going overseas, that's always wise. Okay, Fidelity also noted that the SVB produced a reputation for having non-as strict lending standards, meaning, now remember what I told you about the loan that I was offered as a young man, 20 years old, E4 in the Air Force, or E3. I wasn't, and this was back in 2000, it was 2000, 99, 2000. I really wasn't making much. I'm telling you, I really was not making much at all. At all. And the amount they offered me at that time, astronomical. And they were doing what they were calling predatory loan or predatory lending practices back then. That was a whole big deal. Okay, now with that in mind, meaning that the bank may have offered loans to risky venture-backed firms that had deposits at SVB. Now remember, I said what happened with that housing crash and the financial troubles we had in 2008, 2009 started very similar. Predatory lending practices. People buying houses and getting approved for loans they had no business getting approved for. And here we go. It seems like we're going through the same thing again. Now, I'm not a banker, but if I had to guess, I would say that this Silicon Valley Bank is not the only bank that was doing this. Obtaining capital became a more challenging feat since a rising rate climate had decimated the tech sector. There's an old adage that says the Fed tightens until something breaks. Jurrien Timmer, however you say that, director of global macro at Fidelity, said in a note, it looks like what we have a sense of what is breaking during this Fed cycle. When these balance sheet problems became apparent, panic began spreading across social media. House Financial Services Committee Chairman Patrick McHenry, a Republican from North Carolina, called it the first Twitter-fueled bank run. But was the same true of Silvergate and Signature Bank? Silvergate Capital Corp, a cryptocurrency-focused bank with $11 billion in assets, announced on March 8th that it would wind down operations and liquidate the bank, citing recent industry and regulatory developments. I'm here to tell you, look, they're trying to move to a CBDC, a central bank cryptocurrency. I think it's central bank digital currency is what it is. This, in my humble opinion, is not a good thing, but it's coming. It's unavoidable. And in some ways, we're already on that. And I think they have done everything in their power to make crypto look as bad as they could so people would not take that off ramp, jump onto cryptocurrency, and just abandon this fiat system that we currently have. Because had that happened, just my humble opinion, I'm no financial guy, just, me as a novice looking at this. Had that happened, people would have had a hedge of protection against something like this, and they would have been in control of their own finances. Now, that's not to say that, some people think crypto can't be tracked. That's a lie. It can be tracked. Are there some cryptocurrencies that maybe cannot be tracked or maybe make it harder? Sure, absolutely. But what it would have done is it would have given more power to the consumer. And over the years, I have seen all of the negative press cryptocurrency has been getting time and time again. And they're attacking it hard. So again, this is my conspiracy mind. This bank that was heavily, involved with crypto, it's collapsing as well. This other one that was in the tech sector. I could be wrong, but in many ways, I think they've been trying to give cryptocurrency a bad name for a long time so they could take control. You think about what was happening in the early days of crypto. People were getting paid, making big bank very quickly. The more people are independent, financially independent, the less they need the government for. So the powers that be, look, that's a problem. Maybe this is just my tinfoil hat conspiracy mind. Crypto focus Signature, in the third largest bank failure in the U.S. history, suddenly collapsed after customers withdrew more than $10 billion in deposits on March 10th. And that's another thing, especially with social media. It's so I'm going in full conspiracy mind. If you don't know anything about Operation Mockingbird, I believe that's the operation. I would look it up. It was an operation, pretty much a CIA intelligence influence in media. Now with social media, it's made this even easier. Now, allegedly, that program was ended. It's a real program. You can go to freedomofinformationact.gov and look it up. It's not a conspiracy theory. Allegedly, it ended. I'm not sure that's the case. And how easy would it be for them to force, who's them? I don't know. Whoever it is, let's just say some nefarious powers. How easy would it be for them to force a financial collapse by scaring people into making a run on banks? It's a lot easier now with social media. Imagine if we had a country, let's just say, that didn't like us, that wanted to influence a collapse without firing a shot. How easy would that be? Just some things to think about. Depositors were spooked by what transpired at SVB, according to Barney Frank, the former congressman who served as a director at Signature Bank. How interesting. We have no indication of problems until we got a deposit run late Friday, March 10th, which was purely contagion from SVB, he told CNBC. Now, I don't know that that's the case, but it could be. It is very possible. I'm not going to read through the whole article, but just wanted to go over some of those things. Look, I don't know how big this is. Look, I trust God. I could sit here and worry about everything that's happening, every possible collapse and every possible bad thing that could ever happen. But look, I'm going to trust God. I'm going to trust God to take care of me, take whatever steps I can that are within my power, but I'm not going to run around like a chicken with my head cut off, losing my mind. That doesn't do anything for me or my family. Nothing. I'm going to do whatever I can do, take whatever actions I can take, not lose my mind, and pray that God takes care of us. Now, maybe hard times come. We live in a very good time. And I think in some ways, this good time has in many ways been our handicap because we're not used to turmoil and we think it is supposed to be this way, not even understanding that throughout history, there was much turmoil and suffering. And we are so unfamiliar with that. I sometimes wonder if the Western world is ready to live like the third world. Who knows what could happen? I'm not saying that that's going to happen. I am saying, however, all of these things are interesting and it seems like a repeat of what happened in 2008, 2009. And my conclusion is either we learn nothing or maybe this is all on purpose. Who knows?